You're listening to the Segovia Show.
This is the Segovia Show. Welcome to this latest edition of the program. In this one, I gotta talk about forbearance. And because you're probably just as confused about it as I am, that's why I brought on Matt from Summit Lending to try to make sense of what's going on right now with all this craziness due to the current crisis that we're dealing with. But before I get into that, if you're not part of my mailing list, then odds are you missed out on a letter I was circulating over the weekend regarding, well, some kind of relief petition to the governor of the state of California for property owners, because there's a lot of mechanisms that have been put in place from the municipalities all the way to the state level to protect tenants. And while the governor has negotiated with a few banks about the possibility of mortgage deferment, or like we're going to discuss later, forbearance, there isn't much of anything terms of recourse for property owners. And in fact, based on the strictness of what's happened in some local areas like Los Angeles, the property owners are left holding the bill. So this is basically a petition to the governor to provide some kind of relief that will help aid the property owners along this crisis, just like everybody else, because we are all in this together. Well, I brought on my friend Matt from Summit Lending to discuss forbearance. But before I get into that, this was a podcast that I had to do outside my regularly scheduled recording sessions. So I do ask that you pardon that I couldn't clean up some of the background audio that might have been picked up. So I hope you're able to ignore that and pay attention to the essential and pertinent information that we impart here. So without further ado, here's my conversation with Matt.
The main concern that has been arising in all this has been, what effects are we ultimately going to see in housing when we have 1/3 of the rents that haven't been paid or haven't been collected in April? And I'm sure there's a mix of people that are affected by COVID-19 and individuals that are going on what is called a rent strike or cancel rent direction. I can't blame them entirely when I've been hearing news about also mortgage holders trying to do something similar to not pay the mortgage and what is called forbearance. Now, up until the lockdown, I got to tell you, I never even heard of a forbearance. So for those that probably never even heard of this either, can you explain a bit what forbearance actually is and what it's defined as and what it actually means if someone tries to go for it?
Well, traditionally speaking, when we were talking about forbearance, it's kind of funny how all these things happen. Something that had been around all of a sudden becomes common terminology, right? But forbearance was traditional, like, hey, you fell behind 2-3 months on your mortgage payment. And instead of going through the process of foreclosure and the lender defaulting, you being proactive and you calling your servicer and saying, hey, was laid off of work, or, this happened. I have the capacity to get back on track. I can't pay you the 2 months today, but can you come up with an agreement to get me back on track and to have my loan back to a regular performing loan, essentially, without going into default? So what that would traditionally look like is, in forbearance agreements can be different, right? Traditionally, if you were behind 2 months, the lender might give you a proposal that says, hey, you're going to be caught up in 4 months. So you're going to begin to make your regular mortgage payment, plus we're going to divide up whatever those 2 months you missed into regular monthly payments. So you're essentially paying extra for a certain duration of time during that forbearance agreement. And then once you're caught up, then everything goes back to the way that it was. That was traditionally what a forbearance was. What's happened in this case, and I was watching a interview. It was actually a panel with some of the brightest mortgage people in the industry. It was really eye-opening. David Stevens is one of the guys that he was involved during the Obama administration during the mortgage meltdown. And I don't mean to get for anything to be political or to make anybody sound better or worse than somebody else. Mm-hmm. But essentially what happened during the mortgage meltdown was the administration had virtually every large servicer, they flew out to Washington, D.C. They all sat in the big room of the Treasury Department. And for 2 days, they talked through how they were going to handle what was happening and unfolding, and how they were looking to fix it. And it was like 2 days of meetings of what's every possible outcome. I mean, you can't see everything coming, right? But if you get some of the biggest companies in the business all together in one room, trying to sort through problems, they're going to come up with some pretty good ideas. They're going to troubleshoot a lot of things up front. What happened in this case, though, is the government announced that they were going to be offering a forbearance on mortgages. Mortgage companies, couldn't foreclose as a result of the closure of mostly for our economy, or most businesses, due to COVID-19. But there wasn't necessarily a laid out plan. So the announcement, it was fire ready aim type of thing. And I'm not obviously that causes a lot of issues. It causes still I think a lot of room for confusion as far as how things are going to play out. And I'm not trying to fault them, because back in 2008, 2009, the entire recession and the global recession was due to mortgages. So it was essentially, I mean, if you're a fire department, if one fire is so large it's catching other things on fire, you contain that one first. Yeah. And in this case, COVID-19 is the fire, and we're one of those other, the casualties as a result of it. So I can understand that you might not play out every scenario the same way that you did before, but it still leaves us where we are today. Policies change. I mean, initially, and not to go off on a tangent about this, but if then one of the next questions on the forbearance is that, okay, so the borrower doesn't have to make the payments. And by the way, to have a forbearance, one of the big things that they missed is you don't have to prove a hardship. So you don't have to document that you lost your job. You just have to basically attest that you're going through a financial hardship. And then the media, for the most part, has taken a relatively casual approach to forbearance. And people aren't necessarily educated that it's not free money, that you're going to have to repay the amount of mortgage payments that you're skipping. It could be, and it depends on what that forbearance agreement looks like, right? Mm-hmm. So it could be immediately, it could be over a certain duration of time, it could be added onto the loan. But essentially, I mean, there's no free lunch here. And so one of the next things that happened was, especially on FHA loans, is that during a forbearance, the servicer still has to pay the investor. So you have a mortgage servicing company that had to pay the amount of money to the investor for the payment, but they weren't collecting payment from the borrower. That was one of the big that was one of the big concerns. That got patched. So there are things that are happening. There are things that are getting patched. There is still uncertainty in the future. And the biggest thing that I would say to somebody is that if you've lost your job, if you don't have the means to make your payment, you need to use forbearance. I mean, save your house. Yeah. But if it sounds like, it'd be really convenient for me not to pay my mortgage the next couple months, I would do everything I can to avoid a forbearance. We don't know, they said that you can't have a mortgage late on your credit report as a result of going through a forbearance. But what we don't know is in 12 months from now, 24 months from now, how are the mortgage companies going to look at this? So you didn't have a mortgage late, but could we verify whether you had a forbearance or not? If you did a forbearance, does that affect your credit worthiness moving forward? Right? Like if you were on a credit risk panel, and would you say that people that have had a forbearance are more likely to go into default or to skip a payment in the future? Now, I'm not, we don't know if this is going to happen. This is a concern that's happening within the industry. So if me as a homeowner, I would do everything I could to protect myself from a forbearance on a mortgage. But if it was something that I need to exercise because I could not make my payment, I absolutely would.
This forbearance, as you mentioned, has been around for some time. It's just something that's never actually been utilized to this scale. So what then does it mean going forward? How will it impact the industry? Will this be on record, or will there be like an asterisk on it, like to say, like the Astros, you guys cheated, so does that championship count? Like put an asterisk next to it.
I don't think nobody in the mortgage business is going to boo you because you had a forbearance, but yeah, it could be an asterisk.
Yeah, but there'll be questions. See, like you had a forbearance in 2020. Now, was that due to COVID or was that due to something else? I think if that hasn't already been explained by the time we've been having this conversation, I hope it is clarified from here on out. Because if it's reported to the credit agencies and it's because something that's completely out of people's power, this is where the government is really flexing their muscles and saying, "Stay home." It's like that doesn't happen in a free environment. So I listened to Ben Shapiro. So Ben Shapiro had an excellent point because I've been actually having discussions in the background where like, guys, the so-called stimulus bill is not a bailout. It's basically the government, after they crashed their vehicle into your home, paying you for destroying your home. Businesses have been shuttered. Their livelihoods destroyed. Those that are affected that can't collect, how can they pay their responsibilities if by the order of the government they cannot make those obligations? So I think that is the big question. I hope that it's not reported to the credit agencies as in understood you that COVID-19 is just something that's like, it's called an act of God for a reason. That's like, what is this thing, you know? So if it was something like this is in 2008. This was not some kind of financial meltdown that some people saw coming and like, oh, there it is. No, this is something completely different. This was not a bubble anyone saw like, oh, look, housing bubble burst. Because one of the next concerns then, like you mentioned about these forbearing collections, is that this article came through from Yahoo on April 7th. I thought, it's going to be interesting for me to bring it up. This was, I think, is on, it's Yahoo. So loan servicers say they saw a spike of 1,896% of requests to delay mortgage payments to lenders. Like lenders were reporting that they saw that spike.
That's up from virtually zero, right? I mean, hardly anybody was before. So yeah, this gets announced, and I had heard of a lot of servicers. I mean, it was like a 6-hour hold time. So if you need a forbearance, I would say that first of all, go on to your mortgage servicer's website first. They probably have something. Try and enroll online prior to calling them. But I know I cannot say this enough. If you don't need a forbearance, don't just use this as a convenient way to not make a payment for a couple months and figure you'll get caught up later. But if you need one, save your house, save your credit, do the forbearance.
Absolutely, and that's the same advice that I give to renters as well, those that are listening, because I serve for my show. I'm talking to anyone and everyone that's involved, whether they're a tenant or a homeowner that wants to look to increase their estate or whatever. It's all the same because we're all literally in this together. And I was making an analogy, which I don't think it's all far off in my last episode, where I titled it "Save the economy, save the world," because housing is the only thing that can help us weather this storm. There was an interesting article that will actually be coming up because I'm going to bump that episode. I'm rebuttaling a Forbes article that's it. I predicted housing bubble 2.0 is going to burst. This is not a bubble. But anyway, I don't want to get all worked up about that one. I already vented in that episode, but I'm going to bump it to make space for this one because forbearance is more important. It's more timely, where it's there. Just how many jobs are created for the building of one single family home. It's basically securing a job for 3 people in 1 year, just as how many industries need to get involved just to deal with one single family home being built. And that's money that's just circulating. That's with when you grow this kind of economy. So that's just one house. Imagine more housing that we desperately need because we have a shortage.
That's even a new home build. I mean, think about when you buy a house, how much mail you get flooded with from people. That goes to show you, even if you buy a house, what it means to the economy.
Yeah.
I mean, the mail when you buy a house, it is insane for 30, 45 days. Everybody in the world, every furniture company, Lowe's, Home Depot, everybody is sending you stuff because people make improvements. People need furniture. And not to mention all the vendors, even in the escrow. So, yeah, I agree. Housing is incredibly important to our economy.
And the concern is now, then what happens if we had an example of a third not paying the rent just in April alone? What happens in May when this thing is still getting worse and we haven't reopened our economy? And let's go to the extreme. No one pays the rent. Then now we're talking about people that can't pay their mortgages. That instead of, well, let's say a third of mortgages aren't paid in May. How scary would that look for the mortgage industry?
Well, I think that's the biggest concern on housing is how many people don't pay rent and how many people go on forbearance. It's isn't this kind of like saying like depending on how if I go to the bar on Friday night, how I feel Saturday morning depends on how many drinks I had at the bar, right? That's kind of how the housing economy is. Like when it comes to people in this forbearance situation, the more people go on forbearance, the deeper the hole we're digging, right? And the more it'll impact is also credit standards moving forward. You'll see, we're seeing it right now with a lot of different investors are requiring higher credit scores on FHA or lower debt ratios. But when we're coming out of this thing, if there is more inventory, if you are a seller, you want to have as many qualified buyers as possible. And if credit requirements become stricter than they need to be based upon too many people taking forbearance, that means you have less potential buyers for your house. And that also means that, unfortunately, for some of the people that have been waiting for an opportunity to buy a house, I mean, we're only a couple months removed from hardly any inventory, right? If you wanted to buy a house, you were up against 10 plus other offers, and you didn't have that many homes to choose from in the first place. So if we can come out of this and see enough from a buyer standpoint, have incredibly low rates as a result of the Fed buying mortgages and driving the interest rates down for you, and if there's a little bit more inventory and a little bit less competitiveness, that's a place that a buyer hasn't been in years.
Yeah. That's what's interesting to see. And I think that's why the opportunists have come out. Those that have the means and ability to buy are coming out to buy. I've actually seen an FHA offer come around. It's like, well, that's one I haven't seen. I didn't expect to see that one right now, but there it is. And during this crisis, especially when we talk about FHA, because FHA, I think a lot of my buyers tend to go that route, mostly because it's the lowest requirements, not the strictest in terms of like preparedness. Like, oh, I don't have the best credit score. I don't have that much money in the tank to be able to put into a house. That's why they turn to FHA. Are those times being affected by all this right now, or FHA for the most part still, as of now, still basically running as it normally has?
Well, I mean, keep in mind, FHA is just an insurance company for these mortgages. So FHA is behaving the way that it traditionally would, outside of now requiring that a buyer, and this is probably temporary, who knows if it'll stay more long term, but they're requiring that you have 2 months worth of mortgage payments in the bank after closing. So we're going to check in reserves. That's been FHA's announcement. They've provided guidance on how appraisals can be handled in terms of inspections. Outside of that, it's varying lender to lender. There are some companies that are requiring a 680 credit score for an FHA loan, where they might have required a 640 or a 620 before. So FHA usually provides uniformity in terms of underwriting and qualifying. They still do that, but some mortgage companies are assessing risk in this environment.
Of course.
One of the worst things that can happen is that you buy a house and then you go into forbearance immediately. And that stuff, I mean, I was talking to a coworker of mine, and he got a call from somebody, a buyer, and they wanted to use down payment assistance, not put any money down, buy a house, and then immediately go into forbearance. That was their grandmaster plan.
Wow.
So I'm not saying that is by no means is that the majority of people that are looking for an FHA loan, but that type of thinking, or that even unintentionally that occurring, is what worries lenders.
Yeah, because that's something that's this was highlighted by an eviction attorney this week. I didn't weigh in on the tweet just because I tried to avoid Twitter altogether, but I did see the tweet. I did respond to his follow-up today. The tweet that he sent out was something to the effect of one of his clients had just leased out a property at the beginning of April. The check bounced, and he can't do anything about it. So it's like, okay, so that means they haven't paid any rent. And he can't do anything about it because it's here in Los Angeles and in the state of California, thanks to the California Judicial Council stopping all forms of eviction, that they can't do anything about it. So he vented about it on Twitter. Says this is insane. Imagine more people do this, try to take advantage of the economic situation and exploit it. Well, the response to that tweet compared to every other tweet he's ever sent was enormous, because there were about 400 people weighing in, and more than half of them were laughing about it and hoping that other people do this more. Like, what? And I
speak out about it or exploit it.
Not to exploit it. It's like do more of this. Like not to the attorney, but to other tenants that go take advantage of this loophole to screw over landlords.
Just burn it down is their attitude, huh?
Exactly. So he vented about that the day we're recording this, and that's the one I weighed in. I told him, hey, Twitter's a toxic place. I mean, it's not exactly the norm in reality, but it's still alarming, because that's what you're going to find in social media, which is unfortunate. And with more people going to social media, some people might think that, whoa, is this really the world? Social media never represented the world, but now is the only way people are connecting. Like social distancing turned people back to Facebook. They left, oh, I don't like Facebook, I left it. Now they're back in Facebook. And now they're being reminded why they left Facebook in the first place. So it's like, yeah, some people live behind an avatar. That's all it is. Or they just like seeing the domino effect of people losing their minds over a thing. Here, I made a controversial commentary. Let's see how much mileage I can get out of this. It's sad.
People behave pretty poorly online a lot of the time.
But that's why I'm calling for just for people to keep calm, a balance of what's going on out there. It's reading a headline isn't news. News is beyond the headline. Just read the context, because there's no context, it's not news. So with this whole forbearance thing, because I do have some friends that are investors, and they've been trying to educate people on this, but they've only scratched the surface. And the panel you mentioned, for those listening at the show notes accompanying this episode at www.theandrewsegovia.com, I'm going to embed that 1 hour panel that you mentioned.
Yeah, I tried to clip what I thought would be most interesting and most appropriate for people. But that 1 hour long panel, there's a lot of different people that are really bright minds economically and in the mortgage business. And I watched it 3 times, to be candid with you. It's really good information. And I think you talked about the news. The news, I don't think that they always they don't specialize in something well enough, like for the most part, right? To really truly understand the mechanics of it. And during times like this, it's nice to have people that are experts in that field. And they certainly are.
Yeah, and that's good, because we need more of that. Because when I did hit the link that as you mentioned, and I say that to watch later, but I'm like, so few people have seen this. We need more people to get the information. That's why it frustrates me that we have a bunch of pundits talking. It's like, shut up, let the experts talk. And even then, I'm like, can we not have the activist experts talk? It's like we got to weed through them too, So It's like, who do we listen to? And like you mentioned, that was a great panel. And I know that for a lot of people, a lot of the stuff might go over their heads, but you highlighted some things that were very important, and it's something that was worth the conversation. Like you mentioned, for those that can pay their mortgage, don't go for forbearance. And it's like those that can pay their rent, continue to contribute, because there are those of us that are still essential to the workforce that we have been unimpeded by this. In fact, we're working longer hours to get things done. So we should continue doing our part, because there are people depending on what we do, both with our work and our finances, because the economy is the bloodline of everyone. And with small business being the backbone of America, just to see it all go to hell in a handbasket like that. Oh man. Like not a discussion about this, but was this worth it in the end when all is said and done? I don't think that's even worth a conversation, but I'm sure that there'll be a lot to learn from through all this. This is uncharted territory in American history, even world history. To imagine the whole world being brought to its knees by an unseen foe like this, that's crazy. Absolutely crazy.
Wild, but we're all in it together. Let's, so to speak, let's not burn it down. Let's all work through this. The more we work together to get through this, the faster we'll all get back on track. And I do think this is a time that we have to give we have to be more empathetic and a little bit more lenient with others. It's not, if you're going to call a mortgage servicing company, you have to realize that they staff based upon a certain amount of people you usually call, and they're getting crushed. If your call volume increases, I think you said 1,000%.
Over 1,000%.
Over 1,000%. And you were just transitioned to work from the office to a work from home atmosphere, and you're juggling your kids, working crazy hours. I understand the frustration of waiting on hold. I haven't called to deal with that frustration myself. But at the same time, I think we have to remember when we can is to be empathetic, to other people. It's not difficult. Being cooped up in your house is not easy. In dealing with the inefficiencies within our economy based upon volume of business, depending on the industry, and also just the antiquatedness of working from home and a different type of work schedule.
So Matt, for our listening audience, where can they learn more about this if they have any questions regarding mortgages?
Related to forbearance, log on to your servicing company's website. If you have any questions, if you're looking to buy, get pre-approved as in renovation loans, Facebook page would be Matt Cady Mortgage Team. My office number is 800-667-3041.
For those listening, the notes will be included. You'll find all of his contact information that he mentioned at the show notes of the company's episode at www.theandresegovia.com. Matt, thank you so much for joining us to let us know about giving us some more insight as to cutting through the murky cloud and haziness of all this confusion. But like you said, we're all in this together, and we'll persevere. So we'll come out of this.
I hope it helped. Thank you for having me.
And that does it for this edition of the Andres Segovia Show. Remember to like, share, and subscribe wherever you might be listening to the program so you can be in the know. If you want a question featured on the program, you can reach me on Facebook and Instagram, same handle, at the Andres Segovia, on Twitter, @_Andres Segovia, and of course, email at andres@segoviares.com. Thank you so much for listening to the program, and I'll see you on the next one.